two assets. One singular mission. They seek to replace the dollar. They offer an alternative to the world's reserve currency. On one side stands gold. It has pursued this role for 5,000 years. Vaults of empires, coffers of kings. It is the original store of wealth. On the other side stands Bitcoin. It has existed for less than 2 decades, an infant in the world of finance. Yet it makes the same bold promise as its ancient rival. It promises to liberate money from the control of states, from central banks. Both assets seek the throne of global money. Both offer a haven for wealth in a world of uncertainty. The question is simple: which one will win? Which force will shape the new financial order dawning? Gold is old. It is ancient. It is woven into the very fabric of human civilization. Long before the first bank was built, long before the first paper currency was printed, humanity recognized gold's unique power. It has a deep, warm glow that captivates the eye. It is remarkably dense. It feels substantial in the hand. Crucially, it does not rust or tarnish. A gold coin pulled from a sunken galleon looks much the same as the day it was minted centuries ago. This eternal durability, combined with its natural scarcity, made it the first and most enduring form of money. It was a standard chosen not by a king or a committee, but by the consensus of humanity over millennia. Empires rose and fell, but gold remained. The Romans stamped the faces of their emperors onto gold coins, spreading influence across the known world. The Spanish plundered the New World for its treasures, forever changing global economies. Kings and queens hoarded gold in fortified vaults, understanding it was the foundation of their power. Nations once backed their entire currencies with physical gold, a system known as the gold standard. This imposed discipline. Governments couldn't print more money than gold reserves allowed. Even today, central banks hold vast reserves of gold bars. They do this because gold requires no one's promise. Gold is physical, an element with atomic number 79. You can touch it, weigh it, and verify its authenticity with simple tests. This unparalleled history gives gold a unique form of legitimacy. It is the ultimate asset for times of chaos. Bitcoin is new. It is a ghost in the machine. It emerged in 2009 from the mind of a creator, or creators known only by the pseudonym Satoshi Nakamoto. Then, they vanished. They left behind a piece of software, a 9-page paper, an idea that would challenge the very foundations of money. Bitcoin is not a physical coin you can hold in your hand. It is not stored in a vault. It is a string of digital code, a balance recorded on a global ledger called the blockchain. Despite its intangible nature, many have come to call it digital gold. The creation of Bitcoin is governed by mathematics, not by a central authority. Its rules are enshrined in its open-source code, which anyone can inspect. This code dictates that only 21 million Bitcoin will ever exist, not one more. New Bitcoins are brought into existence through a process called mining. It involves powerful computers across the globe competing to solve complex mathematical puzzles. The winner gets to add the next block of transactions and is rewarded with new Bitcoin. This decentralized network of miners validates and secures transactions, ensuring that no single entity is in control of a bank, a government. Why was Bitcoin created? The timing of its birth, in the ashes of the 2008 financial crisis, offers a clue. It was designed as a direct response to a system that seemed broken. It was built to be a form of money that exists outside the control of governments, central banks. It offers an escape from policies like quantitative easing, which can devalue traditional currencies over time. It allows transfer of value across borders with no intermediary, a feature that alarms those who wish to control the flow of capital. For some, privacy. For others, speculation. But it demands new responsibilities. Despite their profound differences, gold and Bitcoin share a common soul. They are both built on the principle of scarcity. Gold's supply is limited by the laws of physics and the difficulty of pulling it from the Earth's crust. Bitcoin's supply is limited by the unchangeable laws of its own code. This finite nature is what sets them apart from fiat currencies, which can be created in unlimited quantities by central banks with a few keystrokes. In a world where money is constantly being devalued through inflation, this promise of scarcity is a powerful siren song. Both assets offer a potential sanctuary from the slow erosion of purchasing power. They both function as stores of value, independent of any single government or corporation. Their worth is not derived from a government decree or a company's quarterly earnings. It comes from their inherent properties and the collective belief of the people who hold them. This makes them potential hedges against systemic risk. During times of geopolitical turmoil, economic crisis, or soaring inflation, investors often flee from traditional assets like stocks and bonds. They seek refuge in assets that stand outside the system. Historically, that asset has been gold. Increasingly, Bitcoin is being considered for that same role. Both are leaderless, resilient networks. They introduce competition to state money and shift power toward the individual. The most fundamental difference is the most obvious one. Gold is physical. Bitcoin is digital. Gold is atoms. Bitcoin is bits. Gold's physicality means you can hold it without any intermediary. It exists independent of any network or power grid. Bitcoin's digital nature means it is weightless and can be sent across the globe at nearly the speed of light. But it requires technology, computers, the internet, and electricity to exist and be accessed. This is the great divide, the chasm between the world of matter and the world of information. Gold's trust is forged over 5 millennia of history. It is the trust of experience. Bitcoin's trust is technological. It is the trust of mathematical proof and cryptographic security. Its record is less than 2 decades old, a mere blip in financial history. It has been marked by periods of extreme volatility, with breathtaking rallies followed by gut-wrenching crashes. The methods of mining are metaphorically similar, but practically worlds apart. Gold uses industrial force. Bitcoin uses computational brute force and electricity. Both processes are resource-intensive and debated. The energy secures Bitcoin, feature and cost. To store gold, walls, guards, insurance. Risk, physical theft. To store Bitcoin, secure a private key. Risk, hacking or loss. If you lose your keys, your Bitcoin is inaccessible forever. Both demand responsibility, but of different kinds. Central banks are the high priests of the modern financial system. Their actions, though often quiet, speak with immense volume. When you observe how they treat gold and Bitcoin, a clear picture of power emerges. For decades, central banks have been accumulating gold. China, Russia, India. They do not do this for speculation. They view gold as a neutral reserve asset, insurance against instability in the dollar system. Their steady buying provides an underlying bid, confirming its role as a pillar of the global monetary order. Now, consider their stance on Bitcoin: caution, suspicion, outright hostility. Some countries have banned financial institutions from dealing with it. Others have restricted its use or mining. The major central banks remain deeply skeptical, because Bitcoin, if successful, threatens the system. It could reduce control of money supply, set interest rates, and manage its economy. It challenges their monopoly on money. Buying gold is playing the established game. Gold is understood. They want the digital wrapper without the decentralized core. A system where every transaction is visible and controllable. In this quiet war for the future of money, must one side be the absolute victor? Must the world choose a single asset to rule them all? The evidence suggests a simpler, more complex answer. The most likely outcome is not a final victory, but a prolonged period of coexistence. Gold and Bitcoin are not perfect substitutes. They are different tools designed for different, though sometimes overlapping purposes. They will serve different roles for individuals and institutions. The future of money will likely be layered. Gold's role seems secure. History, acceptance by central banks, generational preservation, lower volatility, a reliable hedge, an anchor in a storm. But gold is analog in a digital world. Bitcoin is the digital disruptor. Unparalleled portability, seizure resistance, absolute scarcity, decentralized by design, a hedge against centralization and financial surveillance. We are left with two contenders, two powerful visions for the future of money. The question of which will replace the dollar may be the wrong one. The final verdict is not yet written. Subscribe to The Sovereign Thought. Next time, how China is buying the world without firing a shot.